When advanced semis face heavy distribution and high beta memory blocks dump, Apple quietly scales to vertical all-time highs. On a deep red macro trading session, AAPL decoupled from the tape to print a fresh record at $333.26. Institutional capital isn't chasing backward-looking retail narratives. Smart money is executing an aggressive sector rotation into dominant tech balance sheets. Let's audit the real hardware supercycle playbook, moving the money. Before we dissect Apple's high-margin OLED pricing leverage and parse their highly classified $2,000 premium foldable iPhone infrastructure pipeline, hit like and subscribe. Track live options, Delta Sheets, via our links below. Reviewing the tape, Apple wrapped the session, closing up 1.76% at $333.26. While momentum tech names faced aggressive position trimming, institutional desks treated Apple as the ultimate safe haven liquidity anchor. The immediate terminal catalyst hijacking the tape, Bloomberg reports, indicates Apple is preparing a massive October launch for an OLED iPad mini. This marks the most significant architectural overhaul for the small form factor in half a decade. Moving from legacy liquid retina LCDs to premium OLED panels isn't just a minor visual upgrade. It's a highly calculated institutional margin expansion play. Apple is officially scaling its top-tier screen architecture down the stack. This massive hardware rollout is just the initial phase. Supply chain intelligence confirms Apple will concurrently refresh the entire entry-level iPad, iPad Air, and iPad Pro lineups across the next consecutive quarters. The Street has completely underestimated the latent pricing power of the iPad franchise. The product block has delivered back-to-back quarterly beats, positioning aggregate annual revenue to scale past a massive $30 billion. To offset soaring component costs, Apple is flexing its pricing leverage, implementing structural $100 to $200 price hikes across the new hardware stack. Crucially, buy-side desks confirm premium consumer demand remains entirely inelastic. Concurrently, macro desks are pricing in the highly anticipated foldable iPhone pipeline. With a massive 7.8-inch display that expands to threaten small tablet form factors, the Street is intensely auditing potential product cannibalization. However, the structural price architecture prevents overlap. The upcoming foldable flagship carries a premium $2,000 price vector, while the updated iPad mini anchors the entry layer at a highly competitive $1,500 delta. Wall Street isn't just valuing Apple as a legacy single-product smartphone merchant anymore. Multi-asset funds are pricing a massive multi-device ecosystem refresh that forces sticky user bases to continuously upgrade. Near-term execution risks still loom large on the horizon. Trading at an extended forward multiple, the high-stakes late July earnings report acts as a massive tactical gatekeeper. Any slight guidance miss will spark short-term volatility. Long-term institutional sentiment remains heavily anchored to the upside. Analyst price matrices span a defensive $253 baseline with top desks like Evercore modeling an aggressive $365 target vector. Let's test your active technical conviction on this historic breakout sequence. Is AAPL going to scale straight past the $350 handle post-earnings, or are macro funds setting up a massive sail the news trap? Drop your analysis below. To capture our real-time institutional entry clusters, dark pool transaction tracking logs, and private community workspace alerts to front-run the next big tech breakout sessions before the retail crowd, tap the description links right now.